Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, another tariff could hit the Philippines as U.S. President Donald Trump threatens countries that impose digital tax. Below target inflation is clearing the way for the Monetary Board's policy rate cut this week. For their insights, Dino Aquino, Vice President and Head of Fixed Income Trading at Security Bank Trust and Asset Management, and PJ Garcia of Grow Capital Partners, whose portfolio has 40% exposure on Philippine bonds. And President Marcos says the government is fixing the problem of online gambling, as the Bangko Sentral warns proliferation of illegal sites could put the country back on the gray list. The Philippines could be hit with new tariffs if the U.S. president pushes through with his threat to punish countries imposing digital taxes. Trump complained on Tuesday digital taxes harm American technology. He has put countries with such policies on notice and threatened to impose, quote, substantial additional tariffs and institute export restrictions on our highly protected technology and chips. The Philippines has just enforced a digital tax law in June to the level playing field between local and foreign digital platforms. It imposes a 12% value-added tax on non-resident streaming platforms. The Finance Department is projecting to collect over 100 billion pesos in digital VAT from 2025 to 2028. Economist Reniel Matt Erese of Economia Advisory and Research says the government should not hastily pull back taxes to avoid higher U.S. tariffs. He told Business World it is unclear whether sparing the Philippines from heftier levies would outweigh additional revenues from the digital VAT. But Mon Abria of Asian Consulting Group believes the Philippines might not be affected after all. He told Business World that the law only expanded VAT on online transactions and did not create a separate digital tax. The Bangko Sentral is widely expected to cut policy rates by 25 basis points to 5% tomorrow, August 28th. This would narrow the gap between the Bangko Sentral and the Federal Reserve rates to as low as 50 basis points, the slimmest differential since the Philippines adopted an inflation targeting framework in 2002. Earlier this month, Bangko Sentral Governor Eli Remolona said a rate cut on this month was quite likely. If realized, this would mark the BSP's third consecutive cut this year. On the sidelines of the Manila Tech Summit Tuesday, Remolona also voiced concern over divisions among U.S. officials on monetary policy, particularly the threat of U.S. President Trump's influence on the Fed's independence. He noted Trump has threatened to fire Fed Chair Jerome Powell, saying the Fed chair remains in his post largely to defend the Fed's independence, which in turn protects the autonomy of other central banks. Our first guest told this program earlier this year that he was seeing a decoupling phenomenon happening between the Philippines and the U.S. Well, with us now for more is Dino Aquino, Vice President and Head of Fixed Income Trading at Security Bank Trust and Asset Management. Good to have you back on, Dino.
Morning,
Welcome
Cathy.
to the program.
Thanks for having me again.
All right, so whatever's happened to the decoupling phenomenon then, as we take into consideration the Bangko Sentral decision in the next 24 hours and in the next 3 weeks, the Fed decision on rates.
Yeah, well, I flagged it as early as I think our first interview early on this year that we could actually tighten the policy rates. The reason being is our economy is in a different path versus theirs. Our inflation is way below target of the 2 to 4%, while theirs is stubbornly in the mid twos, right, close to threes even. So in that sense, I think we're moving in a different direction already with them. So we can actually decouple. So that's the reason why I flagged it early on this year.
And is that still the case right now, given that right now the Fed is facing independence issues as Trump threatens to fire Chair Jerome Powell? And before that even, Governor Lisa
Cook. Yeah. Well, that Lisa Cook thing was a big deal because it actually steepened the yield curve in the U.S. yesterday. because it threatened the independence of the Fed when it comes to their policy-making decisions. So it appears that Trump wants to put everyone on his side there, so he's in full control of the Fed. So that's the market doesn't like that in the U.S. setting. Yeah.
Thus, the steepening of the yield curve. But what impact would it have on the timing, though, of the interest rate cut that a lot of people thought might happen because of the Jackson Hole speech?
Well, if you ask me, the Jackson Hole was much ado about nothing. If you ask me.
So it wasn't a dovish pivot.
It's more of the market was really hawkish ahead of the meeting. If you just look at the rate cut probability to start that week, the last week, the Jackson Hole week, I think Monday was around 90% probability of a cut. Then it fell to 70% just ahead of the meeting. So that's a big drop for nothing happening during the week, right? So when he did mention the cut of the possibility of a cut in September, the market took it as dovish. But if you ask me, it's a matter of language. So I guess it's before the Jackson Hole speech, it's a question if he will cut. I will cut if. And after the Jackson Hole speech, I will not cut unless. So it's really just different in terms of language.
So can we take it to mean then that there are data points that he wants to watch out for before the September 17th meeting? So he's still being very data-driven in spite
excessively
of the Fed independence issues.
Yeah. There's a non-farm payroll coming out before the meeting, and also the PCE, which is the Fed's preferred inflation gauge. So there's two data points that could probably influence the decision in September. At the end of the day, we're one data print away for another change in sentiment. So that's really the problem with the Fed right now. It's their backwards looking in terms of policy setting.
Alongside the steepening of the curve in the U.S. bond market, let's take a look at our own, because something nuanced is happening here. Ever since this month started, we've seen a 23 basis point drop
in the 10-year
on the bond yields. We've already hit below 6%, and that's something that hadn't happened since September of last year.
Last year, yeah. This was last year, before the elections shot the rates up back.
What does that tell us?
It just tells us that the Philippines is moving on its own merits. So the market is very much confident, investors are very much confident that the Philippines can be less dependent in terms of the Fed moves. So they're more bullish, actually, in terms of the Philippines. So it means that the credit spread could really tighten further.
How much further then?
Like, probably, right now, I think the credit spread, if you look at just the sovereign spread, it's around 60 to 70 basis points. In context, it was around 150 from 2 years back. So that's how the spreads have tightened, meaning the investors are more confident in investing in Philippines.
What does that mean, though, for the peso? Because as the interest rate differential narrows and tightens further, and we're down to 50 basis points, if indeed the BSP cuts tomorrow in 24 hours, what would that mean for the peso? And how would that translate to the confidence people have of investing in Philippine assets?
I think the impact is quite minimal, given that the dollar is actually devaluing quite. It's diving this year, the value of the dollar. So that would be supportive of the peso. So even though we cut tomorrow, right? We cut policy rates tomorrow. I don't think it would have much impact on the peso.
Okay, I guess we're also watching for the language and how Governor Eli would phrase it for the rest of the year. Well, what kind of statement are you expecting from him after the projected rate cut?
Yeah, actually, Governor Eli Remolino is really ahead of the curve versus, I don't want to sound biased, but compared to the Fed. Your interview with him in last June, he already mentioned two possible rate cuts then. That's when the inflation print didn't come out at 0.9, which is the latest. And that was the time where Iran and Israel are having tension. So he's really forward-looking on the policy move. So I think he's ahead of the curve. So he will likely continue his dovish stance. He will likely continue being more accommodative in the policies.
What about the triple R cuts? Because a rate cut earlier this year, it came with a triple R cut on the reserve requirement ratio.
I think that's for next year's story.
Is that right?
Yeah.
What about the inclusion in the global bond index? Because that's huge. That's going to mean a lot of inflows for inclusion in the JP Morgan Chase index.
Yeah, I think the process is we're going to be part of the watch list first before the actual inclusion. So the likelihood that it will be part of the watch list will be next month. but it doesn't prevent the investors from starting to speculate buying bonds or adding Philippine bonds. I think one foreign shop estimated an inflow of USD 3 billion inflows once it actually goes back to the index. So unlike the stock market where the MSCI rebalancing or the PSE where you can only add positions once the rebalancing starts, in the Philippine markets you can already speculate and add positions. So I think out of the 3 billion, that the possibility of inflows, some of it will already trickle in the bond market.
Sounds exciting. It's
Yeah.
a space to watch, the bond market. Thank you so
Thank you,
much.
Cathy.
We'll watch on how the governor decides in 24 hours. Dino Aquino of Security Bank Trust and Asset Management. President Marcos has vowed to protect the public from addiction to online gambling. Marcos said during his keynote speech at the 2025 Manila Tech Summit, the government is serious in addressing the issue, which has spurred contentious debates in Congress.
There is also the growing problem of online gambling, which preys on our people's vulnerabilities. We are addressing this through initial measures such as suspending the in-app gambling access in mobile payment apps and websites. This way, we can help protect our citizens and preserve the integrity of our financial system.
The president vows to speed up the Philippines' digital transformation and bridge inequalities by investing in the national fiber backbone. This comes as the country's digital economy has generated over 2 trillion pesos in revenues and employed over 11 million Filipinos.
We are investing in the national fiber backbone, or NFB, and once completed by 2028, the NFB will span the archipelago, giving 17 million Filipinos faster and more reliable internet access.
The Bangko Sentral warns the proliferation of illegal e-gambling sites could put the country at risk of returning to the Financial Action Task Force gray list. Bangko Sentral Governor Eli Remolona says they are looking into more safeguards after ordering all e-wallets and banks to remove links to gambling platforms. He said the rise of illegal sites remains a threat to anti-money laundering efforts. In February, the FATF removed the Philippines from its gray list after over 3 years. And in June, the European Commission also took the country off its high-risk list. FinTech Alliance PH Chairman Lito Villanueva hailed these developments as global validation of the country's financial reforms. You're watching Money Talks. Coming right up, the Securities and Exchange Commission says it is closely monitoring the arrest of Global Ferro-Nickel Holdings Inc. Chairman Joseph C. And catch our conversation with PJ Garcia of Grow Capital Partners on the expected policy rate cut tomorrow, Thursday. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. U.S. markets brushed off President Trump's threats and the Federal Reserve edging higher in Tuesday's session. The Nasdaq and the S&P rose by 0.4%, and the Dow climbed by 0.33%. U.S. 10-year Treasury yields ticked down to 4.255%, while gold prices rose to $3,388 per troy ounce. U.S. futures point to slight gains when the markets open later tonight Manila time. The Dow, the S&P, and the Nasdaq are all up by less than 0.1%. Asian markets are moving marginally in the first hour of trading this Wednesday. Australia's ASX 200 up 0.2%. South Korea's Kospi and Japan's Nikkei 225 both down by less than 0.1% each. And a look at our own markets. PSEI opening today Wednesday higher 0.8%, 6,197, just below 6,200. The stock market took a beating yesterday Tuesday following Trump's fresh tariff threats. The local bourse plummeted by over 2%, and the broader all-shares index slid by 1.4%, with the sectoral gauges all in the red, except for mining and oil. As for the Philippine peso, it opens today stronger, 56.93 to the dollar. Peso closed yesterday weaker at 57.07 against the greenback. The 10-year government bond yields ticked up to 6.014% from the previous close of a flat 6%. The country's economic growth expected to slow in the second half of 2025 as global conditions weaken and new U.S. tariffs and exports take full effect, according to research firm BMI. BMI, a unit of Fitch Solutions, kept its full-year GDP growth forecast at 5.4%, below the government's 5.5% to 6.5% target. Philippine exports to the U.S. have been hit with a 19% tariff since August 7th. BMI said the levy will trim medium-term output by 0.4 percentage point, while weak consumption and soft investment flows are expected to weigh further on growth. The economy expanded 5.4% in the first half. For 2026 to 2028, BMI projects growth of 6 to 6.4% in line with government targets. Ahead of what all 20 analysts in a business world poll predict will be a 25 basis point policy rate cut from the Bangko Sentral in 24 hours, our next guest is holding on to his balanced and diversified investment portfolio with a mix of local sovereign bonds, high dividend equities, REITs, and select global exposures. He has now upped his Philippine asset allocation strategy to 45%. Those in Philippine sovereign/investment grade, peso fixed income, and the rest in equities and REITs, and some in cash. Well, maybe that's even changed. Let's ask PJ Garcia, managing partner of Grow Capital Partners, a boutique financial and investment advisory firm providing strategic advice and investment solutions. Good to have you back, PJ. Welcome to the program. A lot's changing. Just a couple of moments ago, you told me that you've already upped some and maybe even reduced or maybe even eliminated all your cash. What's gone on and why?
Yes, I think this is a good time to actually do some rebalancing, especially with the recent announcements or pronouncements of the Fed Chairman Jerome Powell after the Jackson Hole meeting, and indications of our very own BSP Governor Eli Remolona saying that they will further do some cuts. And in fact, they did ahead of the Fed this year, which is for me a good indication, and also reinforces the view. And I agree with Dino, what he said earlier with regards to the BSP being ahead of the curve at this point. Unfortunately, I think the Fed is kind of behind, so I agree with him also on that point. And therefore, we think our view, our bet on Philippine sovereign bonds, especially in the long end, long duration bonds, sort of like paid off for this year. And
that's the 40% level, and you feel that you could add a little bit more.
Yes.
So let's take a look at how your portfolio looks right now. This was just maybe a few weeks ago. You've updated 40% to, I believe, 45%. So you're really big on bonds, even bigger.
Yes.
In fact, what are the durations and what sort of changes did you make and why?
Yeah. First of all, we are just more confident right now. I would say 90-95% that both the Fed and the BSP will be synchronous in terms of interest rate cuts for the remaining of the year, at least 50 basis points. I'm not ruling out a surprise, maybe a third or interest rate cut for the BSP to maybe 75 basis points, as long as inflation still hovers around 1 to 2% below their inflation target for the year. And that, I think, will be very positive for Philippine government bonds, especially on the long end. So we're looking at long duration maturities at this point. So we're extending a duration and, in fact, also take advantage of Philippine corporate bonds that are, of course, yielding or have a higher spread compared to Philippine sovereigns. So some yield pickup there.
All right.
Yeah.
Looks like we've been able to update that very quickly. My team is going to push up and pull up the latest here, because apart from the 45%, you've also moved away from the high dividend yield
Correct.
plays in stocks,
Yes.
and you've just wanted to invest in the regular
Correct.
PSEI-linked
Yes.
equities.
Yes. The reason for
What's
that.
the reason for that?
The reason for that is we're more confident now with regards to our equity allocation or strategy, meaning we're more positive on Philippine core equity stocks, meaning large cap strategy. So for investors who were a bit wary about the volatility and, unfortunately, we're the seller dweller year to date in Asia Pacific equities. Believe it or not, we're the second or third lowest. We're still negative territory, actually, negative 4% or something like that. And most of the Asia Pacific markets are actually positive. So I think, every dog has his day. We think with the recent announcements of both the Fed and the BSP of further interest rate cuts will hopefully improve investor sentiment towards the end of the year. And also, I think a lot of Philippine corporates will be more bold, or say, maybe take advantage of lower rates and maybe increase their capex spending as they are more confident in borrowing for the long term because of lower interest
Let's
rates.
visualize that seller dweller in the ASEAN. Just take a look at the PSEI here. It's really just not, gone past how and why it should. Hazard a guess. A lot's going on. Flood control projects, budget transparency issues. What's causing it?
Okay, Philippine macroeconomic fundamentals are still very much positive. And if you look at the Philippine corporate sector, the private sector, there are a bit some challenges in the first half, yes. Mainly because there's some lower than expected, top line or even earnings were not as positive. It was kind of a mixed bag. But I think that was sort of like maybe some of the uncertainty that the private sector or corporates were kind of not so sure with regards to, especially the elections in May, and we had some political headwinds in the first half. Remember, right before the elections, and even the election results were kind of surprising. But lately, we've been seeing, especially with the recent, of course, political brouhaha with the the flood control projects, for example, and the like. That's, of course, weighing in also with regards to investor sentiment. And not only that, but also we're now being, I would say, super news-driven, dependent on what's happening in the U.S., like what President Trump would say. And recently, of course, he's been saying a lot about, again, threatening about tariffs and the like again. So that's sort of like putting some investors a bit on the edge. And for the Philippines, in terms of the valuations, it's trading at 9 times PE. And for me, that's like 2 standard deviations, below our average mean for the past 10 years. So as an investor, I think that's really a value. If you're a value investor, that's actually a good level to start, allocating more into risky assets like Philippine large cap stocks like the PSEI.
We got about 30 seconds, but was that enough to actually convince you to take away all the cash and just fully deploy?
Yeah, sort of, because like what I said, I'm now like close to 100% sure that both the Fed and the BSP are now aligned with regards to interest rate moves for the rest of the year. And I think that will help boost investor sentiment and, of course, boost fundamentals by hopefully we'll see lower interest rates and corporates are able to borrow at lower rates and plan properly for their capex for next year.
All right, we'll keep a watch on your confidence there. Thank you so much,
Thank you,
PJ.
Cathy. Thanks for
Appreciate it
having me.
and your
Yeah,
insights. PJ Garcia of Grow Capital Partners. Well, the Securities and Exchange Commission says it is closely monitoring the arrest of Global Ferro Nickel Holdings Inc. Chairman Joseph Sy over alleged misrepresentation of his citizenship. The Commission says it will review if regulatory action is needed, reminding listed firms to disclose material events that impact investors. Meanwhile, investors reacted to the arrest, sending FNI shares down by 12% to 1.23 pesos at Tuesday's close. Analysts warned sentiment may remain weak until the issue is resolved. Sy was arrested at NAIA on August 21st and is detained by the Bureau of Immigration over allegations of being an overstaying alien. He now faces a deportation case for misrepresentation. FNI maintains the charge has no basis, citing rulings affirming Sy's Filipino citizenship, and says operations remain stable while it seeks dismissal of the case. San Miguel Corp has raised its stake in Meralco after its power arm bought 93 million pesos worth of shares from Land Bank. SMC unit San Miguel Global Power Holdings Corp acquired over 1 million common shares at 90 pesos apiece through a block sale on the PSE last Friday. This follows its nearly 4 billion peso buyout of Land Bank's 3.8% stake last month, completing a deal stalled for 17 years until a Court of Appeals ruling in 2022 ordering Land Bank to honor the 2008 share purchase agreement. While SMC remains mum on its plans, analysts say an eventual exit could net the firm up to 20 billion pesos for new investments. Meralco and Signal, the owner of this channel, are both part of the MVP Group. Small businesses in Naga City are getting a boost as the PLDT Smart Foundation turned over smart carts to former Vice President and incumbent Naga City Mayor Leni Robredo, with PLDT Chairman Manuel V. Pangilinan leading the ceremony. The Smart Cart program provides micro-entrepreneurs with tools, training, and digital support to help grow their earnings and uplift families. The initiative is made possible through partnerships with ASA Philippines Foundation, Smart Communications, Maya, and the Trade Department. PLDT and Signal, the owner of this channel, are both part of MVP Group. And in sports, PLDT's hot streak continues in the Premier Volleyball League. The high-speed hitters cruise past Kobe Shinwa University of Japan in straight sets for the 2025 PVL Invitational. It is now the franchise's longest winning run, coming just a week after their breakthrough PVL on the tour title. On Tuesday, the volleyball team celebrated with employees during a special visit to the PLDT office.
Kahit hindi naman sa tournament na to, from the previous tournaments as well, lagi kaming almost. So I think isa rin to sa naging motivation namin na hindi sumuko and talagang magtiyaga.
This is a really proud moment for all of us, again, not just for the high-speed hitters, not just for PVL, not even for PLDT, but for the entire nation. You've basically displayed, what it takes to win. All the grit, the determination, the teamwork. Just keep having fun, and I know that you will be champions again.
And before we go, some entertainment news. American pop superstar Taylor Swift and NFL star Travis Kelce announced their engagement early this morning Manila time. In a joint Instagram post, the couple wrote, "Your English teacher and your gym teacher are getting married," accompanied by photos of Kelce proposing to Swift in a garden of pink and rose flowers. Swift's song So High School played in the background of the post. Swift and Kelce began dating in 2023. Swift, a 14-time Grammy winner with 4 Albums of the Year trophies, recently announced her upcoming album, Life of a Showgirl, set for release on October 3rd. Congratulations to the couple. That is it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. Have a great day ahead.